Good afternoon, good morning, and good evening to all, one and all of the Smoking Barrel Nation. I'm Rustin Edwards, based in Geneva, with my illustrious co-host, Mr. Matt Stanley in Dubai.
Greetings.
Well, here we are today on October 15th, midway through the month, and we've got crude oil markets kind of muddling midway through the price range.
We have, but I mean, it's quite brutal, isn't it? I mean, down $2.77 on Brent. Good morning, by the way. Hello, viewers. Hello, Smoking Barrel Nation. It's raining somewhere, isn't it? Jesus. Right. Down $2.79, 74.67 deck Brent. I mean, where were we? This time last week, it was the 15 minus 7, 8. 81.14 we were this time last week. So
yeah, and that was in the height of all the geopolitical risk of what will Israel do against Iran, which apparently that is now starting to fizzle out of the market, as Israel came out last night saying that they were not going to strike, or intimated they weren't going to strike oil or nuclear facilities, but to concentrate on military and command and control structure, which is probably the proper response based on what Iran struck in Israel.
yeah, but I mean, it's following the same pattern, isn't it? Because I think what happens is there's a new wave of attacks, whether that's and again, insert caveat, we're not being flippant here. New wave of attacks, market goes, oh shit, right, and then it goes up, and then it kind of ebbs away over the next week, and then it picks up again, and then ebbs away. There's no, I mean, will there ever be there'll be an attack and the market goes meh. So yeah, look. There was lots of reasons put behind it as to why prices, like you said, got up to $81.16 last week. And it was the threat that Israel were going to attack Iran and energy and what's going to happen there, a wider conflict, yada, yada, yada. But that hasn't happened. I would insert there hasn't happened yet. Whether no one knows, there's all this hyperbole put around. It's going to be on energy infrastructure. It's going to be targeting certain vessels. It's going to target Carg Island. And look, I mean, for the uninitiated, this area called Carg Island might have been, people have been in the press. What is Carg Island? So let me just share my terminal. Okay. One moment, please. Call up. Where are we?
No, Carg Island is a large oil transshipment as well as refining island in the middle of the Persian Gulf.
Correct. So can you see this screen here? I've got my...
Yes, we can.
Okay, here we are, Carg Island. So this is, here's Iran. So it's obviously on the, out here on the sea, the Persian Gulf, Arabian Gulf, depending on where you want to sit. So here's Carg Island. And I think it accounts something crazy like 90% of Iran's exports are ex-Carg Island. So it's basically a whole island with a landing strip and lots of oil on it. Now, if you look at here, you can see here, these are our inventories. These are all individual storage tanks, which we monitor based on very clever algorithms with people with a much bigger brains than mine have put together. And this particular tank here has, say, got 1 million barrels. Now, if I was to click on here, this will bring up all the inventories in Carg Island. 21 million barrels right now is sitting on Carg Island. Last image date, we've got the 7th of October. What we've heard is that a lot of the vessels that are waiting here offshore in order to go and berth at one of the SPMs have departed because of supposed threats that were going to come in. But you can see there's a boat here that's waiting to load Damoon, which is what's 55,000? What, an MR?
That's like a Panamax.
Panamax, there you go. Then we've got another one here, another Panamax, and etc. The list goes on. Obviously, they haven't been seen for a while because these are Iranian vessels. You can see here on our no sanctions. Interesting. We'll have to check that one. Yeah, but look, basically what you can see on the back of all that is that hasn't been updated since the last attack, really. But there's rumors that the vast majority of the boats ready to load Carg Island have moved on. Well, let's wait and see. It's a lot of it, like I said, a lot of it is conjecture, a lot of it is rumor, but the market loves a rumor. But put it all back into a sort of into the context. It's mid-70s on Brent. We've
Mid
largely been
70s,
gone.
it's a mid 70s on Brent with the specter of geopolitical strife reducing just because it's been 2 weeks since Iran struck Israel.
Yeah,
And that's an eon in geopolitical time frame. So
it
it'll
is.
be, and I think it's a case that from a geopolitical standpoint, Israel's got their hands full when you're looking at what they're doing, and so for them to go and strike out against Iran is probably not something it's something they're going to talk about, but something they probably really can't do effectively until other things get cooled off that they're currently engaged in. And there's
Yeah,
also been a lot of pressure on them from the US government and the UK and the EU government to keep things minimized. The Saudi Arabian government has put out their statements about what they would, support and what they wouldn't support. Again, they've been saying that targeting oil infrastructure is a no-go. And again, there's a lot of goodwill that Israel had built up, and I don't think they want to throw that away for a cheeky little strike against Iran.
yeah, but hang on. Let me just ask this the dumbfounded way that I do. So you put some sensibility, some sense around this. If the US and EU can't buy Iranian oil because it's sanctioned, who gives a shit? Right? Why are they saying? Is it because it would cause a shock in markets that will mean energy prices go up, which will mean the end user in the US and EU feels those consequences, even though the oil that Iran export, no one in those countries can buy anyway?
Well, it's still 4 million. Let's say it's 4 million barrels a day of supply to the market that Iran supplies, and so that 4 million barrels goes somewhere. That usually ends up in India, China. That's majority where it all goes to.
Yep.
So
Yep.
if they lose that 4 million barrels of supply, they're going to pull that supply from somewhere else. Now, the knock-on effect is that Iran has threatened that if they get hit, they will strike out against other producing nations' oil infrastructure because for Iran to retaliate against Israel is an expensive proposition. They have to go through a lot of other airspace in order to strike at Israel because they're not neighbors. They're separated by well over 1,000 kilometers of distance.
Yeah.
So to splash out against other oil producing nations, the big risk that everybody had was that it wouldn't be 4 million barrels offline, it would be 12 million barrels offline.
Yeah. Yeah, exactly. I mean, I just wanted to fact check myself because let me do that. Right, here, can you see that one?
Yes.
Iran monthly exports by destination country. Okay, so you got here that September 2.6 million barrels a day is more than a 2-year high. Now, if we go backwards, let's go back all data. Obviously, up here, before this is what 2018.
Yeah, that was when the JCOPA was being used, and their
Yeah,
exports exploded because of that.
exactly. And you had Italy buying France, Turkey, Japan, South Korea, obviously India and China were, but it was 3.8 million barrels a day, sort of 4.5 years ago, April 2018. But you look where sanctions came in, old Trumpy came in, and we went down to a low here of May 2020 at 600,000 barrels a day. Granted, COVID. But
Yeah.
look, you'd have to go back now, September 2024, 2.6 million barrels a day. You have to go back to October 2018. So 6 years ago, 6 years ago, that's where Iran are now, and sort of how much they're exporting and who's buying it. Now, where is it going?
I think a key point to that graph there is that if you go back to 2015, which was pre JCOPA,
Yeah,
and 2014, where they were exporting just a little bit over 1 million barrels.
yeah,
They've had a fourfold increase in what they're exporting out of Iran in reality since the sanctions came back in place after Trump pulled out of the JCOPA.
yeah. Well, just humor me. When is this? Is this Trump election time here?
No, 2018 is the midpoint of the. Let's see, that would be Trump in power. Yes.
Right. Okay. So this is when he enforced sanctions again, and bosh, down we went. And we've been, but if you look now, that trajectory is going up, and you extrapolate that over here, what's to say in 2 years' time they could be back up to these levels? Like you say, oil will find a way. And of the 2.6 million barrels a day, China are buying 1.5. So they're buying 2/3 of that oil, with India being the balance and some others. That's enough graphs for today. If you want to get in contact with your friendly neighborhood Keplerian for a full demo, we are available. 800 Kepler. No, I'm joking. We don't have that. We should, but we don't. No, look, I mean, it's like you said, oil will find a way, and just getting onto the elephant in the room there. China buying 60% of Iran's production. China haven't been buying a lot else though, really, have they? Apparently.
Well, they buy everything. I mean, they buy Russian oil, they buy Venezuelan crude, they buy Russian
Not as
crude,
much as people would hope they would buy,
Chinese
though.
crude. Well, I mean, but they buy enough. But again, demand in China has been lackluster and it continues to underwhelm. OPEC out with their monthly oil report yesterday, downgrading global oil demand another 100,000 barrels a day to 1.9 million barrels. So they're
Yes.
starting. OPEC's and analysts are starting to come into the realm of reality. Finally, after being in the atmosphere of overexuberance. But they're still about 1 million barrels above where the market consensus is on where global oil demand sits.
I want to quote from our good mate, Mr. Clyde Russell, who sits in Hobart, Tasmania. Is it Hobart you sit, Clyde? Anyway, the opinions expressed here are those of the author columnist for Reuters, says Clyde Russell. China's crude oil imports fell for a fifth straight month year on year in September, and are down 350,000 barrels a day so far in 2024. This makes OPEC's modest cut to its China oil demand growth forecast for 2024 to 580,000 barrels a day look hopelessly optimistic. Discuss.
Yes. Because to achieve that, you need to have a massive increase in Chinese imports, and they don't have the incipient oil demand or margin to make that happen. I mean,
yeah.
the stimulus that came out this weekend, there was a big hope that there'd be a huge stimulus package from the Chinese government, and it underwhelmed because basically the Chinese government, from what it looks like, recognized that debt has been overclouding the local communities to a point where they had to absorb that debt just to get the dead real estate off the market.
Yes.
And so basically, the Chinese central government is funding the finishing of projects that were started or refunding projects that weren't started.
Okay. Okay. Look, let me cut across you there. So, okay. He's in Launceston, by the way, not Hobart. Sorry, Clyde. Excuse my Tasmanian geographical ignorance. It was only in July where OPEC were forecasting a rise of 760,000 barrels a day for the world's biggest oil importer. They downgraded that every month since. And, after post APEC, when I was there, that was really the main takeaway was Chinese oil demand growth plateauing and OPEC coming to a reality, or coming to some kind of realization that perhaps those forecasts. But okay, let's just put things in a couple of boxes, right? Let's talk about what this means for flat price and structure in a moment, or what it means for the market. The OPEC demand forecasts are still, what's a polite term, over enthusiastic compared to other forecast agencies, us included. We're looking at around 1.1 billion barrels a day. I think the IEA and EIA are looking at under that, about 920, 950, something like that. But
Yep.
OPEC are double everyone else. Now, what does that do?
Well,
what does that do?
OPEC's doubled on demand,
yeah, but hang
but
on.
more on supply.
What does that do to perception about integrity of OPEC? An external guy looking at, well, OPEC, what are you doing? Like, why are you so optimistic compared to everyone else? Clearly, you've been wrong because you've downgraded it the last 3 months. What do you think market view is of the group on the back of that?
Well, I mean, OPEC is just talking their book. You're long oil, you want high prices. So you have to be telling everybody that the market is high. And if you look at the actions that OPEC has done over the last few years, political actions, They've basically not allowed any agency that is contrary to their view on forward oil demand to be allowed into their meetings anymore. So they barred the IEA. They barred Bloomberg. They barred Reuters, I believe.
Yeah.
Because they were reporting fact, not fiction. And OPEC has been reporting a fiction. They're reporting a narrative that they want to see that shows a stronger market than what is actually out there.
No, hang on. I think that
let me finish. And they refuse to acknowledge the fact that renewable energy and EV penetration is far greater than they want to accept. And that's where their analysis breaks down, is that they're not looking at the bigger picture. They're just focusing on, oh, oil has to go here because this is where we need it to go. Not oil is going to be here because demand is actually waning because people are adopting new technologies and new methods of energy consumption outside of burning petroleum fuel.
Yeah, but hang on. Okay, I'll agree with you and disagree with you on a few parts there. When you look at it, OPEC at the start of the year forecasted around 2.2 million barrels a day of demand growth in 2024. That has been chopped by around 15% now, roughly, in terms of barrels a day compared to where we are. But OPEC didn't bar Bloomberg, IEA, or Reuters from reporting retrospectively facts. They can't argue with those facts, right? The reason what they took umbrage to was an opinion around the forecast OPEC were making were seen as delusional. Though they didn't want that.
Just the truth.
I know. Well, I don't. Look, you said it. You said it right to Russ Edwards at the Smoking Barrel. Yeah, right. Edwards at the smokingbarrel.com. Don't CC me. Just send it to him. All right, and his lawyer or attorney, as you call it, whatever. No, but you're right. It's any negative sentiment that will be in that OPEC room, they don't want in there, right? But when you are double what anyone else is forecasting and you continue to downgrade forecast, and they downgraded 2025 forecast by 100,000 barrels a day, don't you know? It starts to make things look, people like, I mean, I didn't even know the OPEC report was out yesterday, or there was no OPEC news, whatever it was going to be. I think the market kind of goes, oh yeah, let's see what they've written this week. I think they're doing it themselves. They're their own worst enemies when it's coming to being delusional. I get they need to talk their book up. I get that. We've had that discussion in the past. You know, an ice cream salesman's not going to say buy ice cream. Anyone who's selling anything, say you buy this stuff. But if you're going to have integrity as a group when it comes to forecasting demand or economies, whatever it may be, bear in mind, all of this boils down to the economies of especially the GCC core for balancing fiscal budgets. It just doesn't stack up.
Well, it doesn't. But again, I've said this earlier in the year. OPEC's analytics is wrong. They need to have a dose of reality and actually be true to themselves. Otherwise, what happens? You've got the analysts saying, oh my God, we've got huge demand, yet the actions of OPEC show that demand's not there because we keep reducing supply, because we're not getting the price response that we want to have. So the actions of reality of cutting supply versus analysts saying, their internal analysts reporting to the world, oh my God, demand is so good, then they should have never put supply cuts in place.
Well, okay, that's the next question, isn't it? So on the one hand,
they don't even believe their own press.
Well, yeah, but is it a sort of means to an end? If they say we are downgrading our demand forecast, how can they then justify bringing back more oil in December?
When did they start cutting supply to the market?
Well, I mean, COVID, but July 2022 is when these new cuts came in, right?
Yes. And in 2022, they were saying, oh my God, demand is going to be so great. And it never materialized because their analytics were wrong. They refused to acknowledge the fact that EV and renewable energy is taking a bigger slice of the pie. And because they refused to acknowledge that fact, and that's what a lot of analysts got wrong this year, is refusing to take into consideration EV penetration and alternative energy usage and energy conservation that is happening because of more efficient engines being developed. All these things have come together, and a lot of people have missed that boat. Smoking Barrel, we were talking about it.
Yeah, we were, and
we
you know,
still talk. I still talk about it as part of the smoking barrel because
yeah,
again, it is a
you know,
case that EV penetration is far greater and is having a far larger impact on demand destruction than people can grasp and realize because they don't understand the whole concept of what an EV is. Number one, number two, and they don't understand the energy infrastructure that has been impacted due to more efficient engines that are coming out, lower consumption, doing the same amount of work.
yeah. You froze them for a moment. I was worried the feds were onto you.
Ah, no, maybe that was OPEC cutting back my supply of energy.
Prince Abdulaziz. Oh, no, let's not
let,
go there. Let's just
let
let's
me
move
just step up
on.
off my
Let's
soapbox.
let's move on very, very quickly. No, but I mean, you know, we spoke about it. Yeah, we have spoken about it, and I raised an article that my colleague wrote early August, and let me just make sure I'm doing this properly. Share screen. Let's share this one. Look, I don't want to say we're first to market, but we're talking 3 months ago now. Hang on, 2 months ago. Sorry, holiday mode activated. Update on the 2nd of August. Look, Chinese oil demand is set to peak in 2026. Has it already? Okay, this was quite a punchy article that Edith wrote, but it was really well, received and well spoken about, and was a big discussion point during APEC. And it was because of EV penetration and what was it? I think it was government incentives for electric trucks.
Well, it's not so much electric trucks; it's natural gas
Natural
powered.
gas. Sorry, excuse me. Yeah. I'm getting me renewables mixed up. Excuse me.
And even the Financial Times has put out an article here today that
Even
China's
the
oil
financial.
demand is basically being cut because natural gas is coming in and taking over their trucking sector. That's in the Financial Times as of yesterday.
Yeah.
And it says that, Financial Times is saying that Chinese diesel use is to fall 4% in 2024 compared to 2023.
Was that
And maybe other, say again?
were they quoting the Platts article yesterday?
They might have been.
Because I'm just saying we were 2 months earlier with that. Anyway, look, all the renewable, all the Chinese stuff. Okay, we've been talking about China a long time, and we've been talking about it since the start of the year, and now things are coming into, we're halfway through October, 2.5 months till Christmas. We've got election coming up, but largely the market is focused on China and Chinese oil demand. Now, if you take,
and that's because China has been the growth story in commodities for the
right,
last 15 years, and the
right.
paradigm is shifting.
Right. Okay. Let's say right now, market's at $75 a barrel, down $5 a barrel in the last, or $6 in the last week.
But
Do
the
you think
last 2 days, Monday,
okay,
Tuesday.
17? Okay. All right. Fine. Yeah. Okay. If China do come out with a big stimulus package, surprise the market, do we get back up to 80? Is that the most important factor in oil markets right now? Forget geopolitical tensions, supply issues, etc. Not that we're not dismissing all that, but if you're an oil trader, you're invested in oil markets right now, is Chinese stimulus the most important factor in where flat price goes for the rest of the year?
If you remove geopolitical risk from the equation, okay, so you take that removes the floor from oil price. So it does become a fact of where does your demand come from? Now, if China actually puts stimulus in place to stoke on petroleum demand, which they're basically going to reverse all of what they've done on EV and renewable energy that they've been investing heavily in since 2022, and go back to oil demand, then yes, you'll see a rally in markets because people will perceive that, oh my God, China's going to increase demand exponentially. And once again, we go into $85 crude without a problem, I would think. However, you would need to see that backed up with actual demand figures. Now, it's one thing if China imports a bunch of crude and exports a bunch of oil back into the market, a bunch of refined products back into the market, then you're basically going to start crushing refining margins around the world. So it's an
Yeah.
essence. disappearance of petroleum versus shifting petroleum from crude oil to products.
Yeah, I think I think that's a really important point there, because is the market waiting for China to come out and save the day with some rescue package, essentially? I can't see it happening, because you're right. You know, billions of dollars of investment, infrastructure changes, government incentives, government subsidies, do they all just get chucked out the window in the hope that the oil market wants to rally another $7, $8, $10 a barrel, whatever it's worth? No, it won't, and it won't. And I think, you know, we heard a rumor this morning that there will be additional export quotas because the main refiners down in Shandong, etc., are asking for more to allow to produce to refine more material. That could
Well, no,
really
it's
be.
a case of there's no demand for their product inside China. They need to get rid of it. And so they need more export quota in order to push it out to the market. Otherwise, they have to shut down.
Yeah, I mean
I
that's
mean,
how
if
you
China's
sell.
economy is so good, why did two refineries shut down this year because of poor economics?
Yeah. No, you're right, and I think that if additional export quotas are announced for balanced Q4, I mean I think the whole market sells cracks. I just think that comes off massively.
Yeah,
Um,
you'll see an increase in product in oil demand potentially, or you might see no increase in oil consumption. You'll just see them emptying tanks because, my God, I got a place now I can get rid of all this stuff I've produced.
yeah, yeah, and I think we mentioned a couple of weeks ago when we last recorded was it to me, and I think the market, it's if Golden Week demand looks really, really strong, and I haven't seen any numbers yet. Maybe that's me being ignorant, probably. Um, if Golden Week demand looked really, really good, which was what a couple of weeks ago, first week of October, then I think that could be a boost the market will want. Oh, China are back buying stuff, but I think you're right. I think that the biggest the big sort of takeaway there, if you like, I'll use that term again. In the long term, the Chinese government, I can't see announcing a rescue package to suddenly give a boost to oil demand that everyone is hoping for, especially OPEC. And we just circle that back to OPEC. Is that what they're waiting for? And what do they do at the end of Q4? And I go, oh, actually, we got it all wrong in 2024. Or do they say at the next meeting or the next report comes out and saying, okay, Chinese demand is not going to be as good. That's going to lead on to the December meeting where they're going to kick the can down the road about bringing supply back in December.
Well, I think that at this point, the discussion is shifting from price to a market share
Yeah.
in OPEC. And so I think for them to maintain a market share stance, they need to bring oil supply back into the market. I think no matter how they shake this out, unless they really induce more cuts from OPEC, we're going to see a contango market in 2025.
Yeah, I agree with it.
And we're
All
going to
right.
see
Look,
stock.
yeah. Look, enough ranting about OPEC and what they're doing or what they're not doing. Or how's the lovely world of freight? Show me where we are on that, because that's sort of where we were, isn't it? As you
Well, I
were.
mean, freight has actually come down off of the high level is where it was at, after the rally we had in containerized freight going into the summer. It has returned back to kind of a more of a norm where the market began in 2024. So the impact of the uh, there you go. Should be able to see the chart here.
Talk amongst yourselves, people. Talk amongst yourselves.
I didn't come up. Wait a minute.
It's a
Let's try
bed.
this one more time.
Bed's back on you.
How about now?
Something's happening. Oh, there you are. Oh,
So
nice.
you can see this again provided by a trading economics website, which I find is a very good informational website on macroeconomic data. Um, so log on if you haven't logged on before. But nevertheless, you can see that containerized freight, this is a 5-year chart where we have the exit of COVID in 2022, where freight rates accelerated up to 5,000. And we had this spike here in 2024. and then we've come off. So globalized containerized freight has jumped down from where it was before, and this is even with the specter of the port shutdown in the United States, which is basically right here at
Yeah.
this 2161 level. So nevertheless, freight rates are coming off again because overall demand is not that strong.
That is extraordinary. So basically, back as you were in January, obviously we had that dip sort of end of Q1, you can see there, but really doubled. I mean, I remember looking at this a few months ago now when we were recording. And that some of those indexes were up like 200% on the year. It was mad, and now we're back down to where we were. But I haven't seen a great deal of news that has sort of totally turned that around again. Like, what is the reason? Just explain to the lovely people and me, why did it double, and why is it back to where it is now?
Well, it did double on logistics problems in certain areas around the world. So you had less of ability to move things around, and also you've had the Red Sea issues as part of the reason why it doubled up as much as it did. Because
Right.
remember, when the Houthis started attacking ships, the vessels had to reroute, which
Yeah.
then increased your supply lead time to move boxes from point A to point B. And it takes time for all that to get priced in and feathered down throughout the market. So rates eventually do go up as vessels reroute and re-coordinate. Remember, we were 1 year ago, Israel was attacked by Hamas, and in December is when the Houthis decided to start attacking ships.
Yeah.
So we're 9 months into that. So I don't think we'll see a slowdown in that price. I think we'll still see these rates stay at this kind of level. I don't think they get any much lower because
Yeah.
you still have longer lead time supply and you have higher cost as a result.
But it's the whole. Has it had an effect, sort of a knock-on effect to the whole sort of shipping industry, tankers, dry freight? Has that
Well,
come off linear?
everything. Most companies are avoiding the Red Sea. Some companies try to make it through. They try to sneak their way through by telling the Houthis or communicating ahead beforehand that this ship is not owned by any of the parties you say are there. It's not involved in this trade. Please let us pass without being hit. And some would even think that Russian oil flow should be going through unscathed, but Russian oil has been hit
Yeah.
just as non-Russian based product ships have been hit. So the Houthis are taking their information and going with it however they want. But
Yeah.
net, most companies are still avoiding the Red Sea. Look at how much canal transits are down 70% year on year.
Yeah. No, you're right. Look, I mean, it's a fascinating way to sort of close up the week, because back to where we were, oil prices in the range. Look, like we said before we started today, we're in a holding pattern. I think that there hasn't been a great deal of news, not a great deal of stimulus, especially out of China, to sort of give everyone that kind of boost. What's going on? Markets are off this morning, but we're mid-70s on Brent. So yeah, lower part of the range than we've been in all year, but it definitely seems like a holding pattern. But I mean, things change very quickly. So eyes on the headlines. We won't be recording next week, but we'll be recording the week after. And then, yeah, we've got Bari week coming up, which is mid-November. So we'll both be in town for that in Dubai, won't we? Well,
Yeah, so catch your favorite smoking barrel at whatever watering hole we end up with, and we'll look at doing a simulcast production.
yeah.
That might be a portent to the apocalypse if we're both in the same location at the same time doing a smoking barrel.
Yeah, well, yeah, exactly. Easy target, isn't it?
I think it was somewhere on a Mayan tablet.
Yeah, exactly. But no, good chat as always. Good to see you. I hope everyone's safe and well.
One last thing before we go, there's been a lot of natural disasters in the world, as well as a lot of areas that are under constant turmoil. So if you can support your Red Cross or Red Crescent, please do so, because they do a lot of good work for people, and there's a lot of people in need.
Yeah, absolutely. Absolutely.
All right, that's it for this episode of the Smoking Barrel. Tune in 2 weeks' time. We'll be back.
Ciao.